Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. We have just released our India Market Outlook 2023 titled Playing It Safe. Over the course of the next few weeks, we will be releasing a series of podcasts summarizing our asset class views and key themes for 2023. 2022 has been a difficult year. Escalated geopolitical tensions, sharp rise in energy and commodity prices, and a coordinated monetary policy tightening by the global central banks to deal with persistent inflation kept the market volatility high throughout 2022. Looking ahead, 2023 global macroeconomic backdrop is likely to remain challenging given the heightened risk of a slowdown as lagged effects of monetary policy tightening leads to a weaker demand scenario and lower corporate earnings performance. However, as the monetary policy rate cycle peaks amid receding inflationary pressures in the second half of the year, risk sentiment could improve with growth outlook stabilizing. In our assessment, India's growth inflation dynamics is stable and better than peers. The post-pandemic economic recovery cycle remains strong amid supportive government policies and a pickup in investments. Further, the likely broadening of the recovery to the rural economy and service sectors is a strong tailwind. Inflation is likely to trend lower on easing food and commodity prices, fading pent-up demand pressures, and lagged impact of monetary policy tightening. In our view, the RBI is likely to hike policy rates by another 25 to 50 basis points in first half of 2023, with further policy actions contingent on external developments. Overall, we are more balanced in our asset class outlook given the challenging macro backdrop by being selective in taking risk while keeping a greater margin of safety. We maintain a neutral stance across major asset classes like equities, bonds, cash, and gold. Against this backdrop, we see a safe strategy as the more prudent way to navigate the uncertainties of 2023. The acronym SAFE has a significance for 2023. Now to give a high-level view of the individual themes within our SAFE strategy, S is for secure your yield. In this theme, our focus is on better relative yield opportunities across asset classes. In our view, a balanced portfolio with a mixture of bonds and equities offers an attractive income opportunity. A is for allocate to long-term value. While a balanced allocation is likely to provide an immediate income opportunity for investors, we believe this should be balanced by exposure to structural themes which have a longer runway for growth. We see attractive value in financials, domestic cyclicals, and the investment-led themes. F is for fortify against further surprises. We believe investors should be prepared for downside surprises given the challenging global macroeconomic backdrop and a lower margin of safety for Indian equities. Thus, a defensive portfolio positioning through a neutral allocation to cash, gold, and a defensive tilt among equity sector positioning is a prudent approach to ride out any unexpected jump in volatility. And finally, E is for expand beyond the traditional. We believe the unusual rise in stock and bond correlations in 2022 is unlikely to last in 2023. Nevertheless, the experience does suggest having exposures to relatively uncorrelated assets or less volatile substitutes for traditional asset classes is a prudent allocation. That's it in this episode. Do reach out to your relationship manager for a copy of my India Market Outlook 2023. Thank you as always for listening. If you like this podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.